Hello and welcome. I am Dennison Bertram, co-founder and CEO of tally.xyz. We build leading tools for token sales, ICOs, and token management for some of the largest organizations in the blockchain space. Today, I'm going to talk about DATs. It's 2026 and they were a pretty hot meta of 2025, so it makes sense to check in to see how they're doing. Digital asset treasury companies, DATs, are still a big deal in crypto, but performance has cooled off and a lot of them are now trading at a discount to the value of the coins that they hold. So, if you're not familiar, a DAT is a public company whose main business is to raise capital, whether equity, debt, convertibles, and use it to buy and hold crypto like Bitcoin or Ether on its balance sheet. The goal is usually to give shareholders leveraged exposure to the underlying asset and to outperform simply holding the coin, often by active treasury tactics, issuing shares when trading at a premium, using yield strategies, etc. For investors who cannot or will not hold tokens or ETFs directly, mandates for custody operations, other reasons like that, DATs are pitched as a regulated equity wrapper for digital assets. So how are they doing now? Well, as of late 2025, roughly 200 plus public companies globally have some kind of digital asset treasury strategy, together holding around the low hundreds of billions of dollars in crypto. However, the DAT trade has struggled. By early 2026, at least 37 of the top 100 Bitcoin treasury companies were trading at a discount to their net asset value, and about 40% of them are below net asset value overall. In 2025, virtually all major Bitcoin treasury stocks underperformed the S&P 500, and a majority spent more on their Bitcoin than it's now worth on their books. So the archetype here is the former MicroStrategy, now rebranded as Strategy, which holds about 650,000 Bitcoin, or roughly 3.1% of the eventual Bitcoin supply, and continues to target aggressive BTC yield and dollar gain KPIs through equity and preferred offerings. Other large treasuries include firms like Bitcoin Standard Treasury Company, Bullish, Tesla, Block, Coinbase, Metaplanet, and some miners with public companies alone. They estimate to hold nearly 1 million Bitcoin, or about 5% of the supply. A newer crop of DATs and Bitcoin standard corporates has broadened beyond BTC into ETH and other majors, with at least one large ETH-heavy treasury accumulating several million ETH by the end of 2025. So the big question that most people have is, are DATs going to blow up crypto? So DATs concentrate a meaningful chunk of supply, several percent of total Bitcoin plus growing ETH, but this is still a minority versus the broader market, and holdings are spread over many entities. The real systemic risk is pro-cyclical behavior. If share prices fall and capital markets shut for DATs, they lose the ability to fund new buys, and in a severe stress, some could become forced sellers, amplifying drawdowns. Research notes that the DAT model works best in rising markets with easy capital. In flat or falling markets, persistent NAV discounts, equity dilution fatigue, and debt loads, well, that can turn them into a drag instead of a catalyst. If you're an investor, DATs are basically a levered, actively managed bet on a coin, plus equity market and management risk. Spot ETFs are more like a passive one-to-one wrapper. In a strong bull market with open equity financing, DATs can outperform the underlying. But investors are exposed to dilution, execution, regulation, and the possibility that the stock trades at a discount even when the coin does well. For someone bullish on crypto from New York, such as myself, and comfortable trading US and global equities, DATs are a high beta satellite play, not really core exposure. Core allocation is usually better done via direct coins or regulated spot ETFs, with DATs as a small speculative overlay if desired. So what we're going to see in 2026 is really up in the air, but hopefully, as the market rebounds or gets to a healthy spot, we're going to see DATs become a better play once again. Right now, we're mostly holding our breath to make sure that they don't become forced sellers. That's the update in DATs in 2026. I'll be following this and looking at a number of other things related, so follow along, and I, as always, will see you next time.